Welcome to Agency Acquisitions and Exits. I'm your host, Peter Lang. Today's guest is Sam Shepler, founder of Testimonial Hero. Sam has built a strong niche business and has already used acquisitions to expand capabilities, strengthen delivery, and create more strategic options for his future. In our conversation, we get into his tuck-ins, buying capability instead of just revenue, and what founders should understand before they start using it as a real growth strategy. We unpack what it takes to get your first deals done. So let's dive in. Sam, thank you for joining me.
Thanks, Peter. It's great to be here.
I've been excited to have you on, but I know your background and I had some context to your M&A ambitions and activities, but the folks who are joining us do not. So Sam, before we get into the acquisitions themselves, give people a quick version of what the business is and a little bit of your background.
Yeah, absolutely. Sam Shepler, founder and owner of storysnap.com, collection of category leading B2B services, including testimonialhero.com and producthype.com. I've spent over 12 years in B2B content and creative, mainly on the video side. Started my first agency in 2012, sold that in 2016. Swore I'd never start another agency, but I like everyone, I found my way back in 2018. I started Testimonial Hero. Testimonial Hero helps B2B marketing teams easily create customer stories on site and remotely, working with over 500 B2B category leading B2B tech companies. And yeah, we've after having one M&A experience selling my company, my prior company, I figured, hey, why not get on the other side of the table and try to buy some companies. And we've tucked in a couple companies into Testimonial Hero at this point. We hope to do more, and we're also looking to acquire and completely new offerings as well. So yeah, really, and honestly, Peter, is my favorite thing to do. It's what gives me the most energy of just about anything professionally, like being able to meet and chat with awesome founders. Even if we don't end up doing a deal, or even if the deal doesn't happen for years, which, as you talk about all the time, is often the case, I just love the chance to connect with other creative agency founders. Truly, like the best and part of my day that gives me the most energy.
Lovely. You got up, but we dragged you back in, Sam.
Yes, exactly.
Just so we can set the table with the second stage of your agency journey here, is there anything from your exit that informed how you started your next agency journey?
Absolutely. So my first company was called Skyscope Creative, was the name of it. We basically did, so I had two business partners, my two good friends, and we essentially started it kind of just coming out of college and started freelancing, and then it turned into a business. Pretty typical, accidental kind of entrepreneur story. But yeah, we did videos for all types of people, all types of videos for all types of people. And the biggest thing that I took away for Testimonial Hero when I started it is like, we're not going to do that. That's not as scalable. We're going to kind of productize. We're going to specialize in being the absolute best in the world at one type of video, like customer testimonial videos for one type of buyer, B2B tech. So a lot more scalable to, obviously, there's a lot of ways to win, but in this case, like, I wanted to focus on like a more of a niche product as service approach, and yeah, it's definitely worked out well for us.
Yeah, great. What do you think helped you succeed early on before you started doing, the M&A activity? Like what was some of the foundational changes that made you confident? Because we're going to get into the types of deals you're doing, and that's the deals you've done historically. Assume your team is great and you have reinforcement. So
Yeah.
unpack that a bit.
Yeah, I think it's really like the team, like being, no matter how much AI we get enabled with in agencies, which is fantastic, right? Everyone's talking about tech enabled services and AI enabled agencies these days. Ultimately, it is still about the team, and probably even more about the team, right? When you have maybe slightly less team, you need that team to be even better. Things we did really well from the beginning was just being able to attract and retain awesome people and build a real like leadership team. I think that's something that, you know, a lot of times founders, agency founders especially at a smaller scale. It's kind of like the genius with 1,000 helpers model. And fortunately, we really avoided that. Maybe because I was never a genius. So that was never an option. But yeah, we avoided that really, really quickly, and always had a strong leadership team, which truly enabled us to have that bandwidth for me to go focus on M&A and for my team to integrate those acquisitions. Because, one of the things that I've learned and often have to relearn, after I start talking to a prospective acquisition target is like, if there's no integration strategy, there is no deal thesis. So the whole deal, you know, revolves around the integration thesis. And like, if you're
Yeah.
not crystal clear on that, like you have no deal thesis.
Yeah. The deal thesis is another way of saying value creation. And if you're going to do it, you want it to be accretive to your business, and therefore you need successful integration. And sadly, the people who are the deal sponsors aren't the people doing the integration.
Exactly. If it was up to like, I would be terrible at integrating the deals just because that's not my like skill set. Like my skill set is finding the deals, seeing the bigger picture. Just like a lot of founders, I think we tend to often be more like big picture, strategic, big relationships. But yeah, you need all types, and we have fantastic ops that actually can make sure that value is created post close, which is crucial.
At what point did you start thinking we may not want to just grow this organically? We want to start using M&A?
Yeah, that's a great question. I think it was always something that I s- had heard about or began to hear more about in the zeitgeist. Initially, I probably didn't like understand it. It's one of those things where you hear it and you have to hear it like 10 times to like really understand it. And even then you don't really understand the power of M&A. It's like you have to see it to believe it. I think it was like something I kind of dipped my toe into. Then I sort of like, I was like, all right, well, if we ever do this, I might as well start building relationships now. So that was very key. It's like, even if you don't end up uh, you know, doing a deal anytime soon, it's like the more relationships you have with potential um, potential target companies, or by the way, like if you're trying to sell your company, they might want to acquire you. So that was just always something that I kept in the back of my mind, and I, try to be proactive about. Is like building relationships with people and companies who I thought either we would potentially acquire one day, or they might acquire us. Back in the day, I had no idea which way it would go necessarily. It ended up being that, we acquired them in those cases. But yeah, I mean, we were talking both cases. It was like talking for years about, oh, it'd be interesting, like, if maybe we did some sort of M&A thing. I'm not sure what it would look like, and just keeping those relationships warm over years. Like sometimes timing finally aligns.
Yeah. It's interesting when you think of the black box of it. It's what you hear in media, it's what you see shared online. You had your own experience in your first venture. And it's interesting when I hear about accidental entrepreneurs. You went from university, started a business with your friends. You didn't come from agencies, you didn't come from the industry. And so a lot of this is your own innovation and reinvention of the wheel through trial and error. And you're like, this sounds like it's really fun, which gives you, I think, a friendly disposition to competitors. Like the way you sound, Sam, which I love and appreciate, is you have this natural curiosity about how's it going for y'all? This is how it's going for us. And that's not the typical disposition of folks who are baked and developed in the ad agency world, where it's us versus them, Coca-Cola versus Pepsi. This is a new age friendliness in the industry that's happened since digital came on the road, about the same time you started the agencies. And the fact that you've built these relationships and the sellers thought about you and it matured to an opportunity is just shows so much to your leadership and credit, because someone selling you their business is acknowledging you as a potential CEO for them and their team.
100%. And yeah, I think um, that is, there was one M&A book I read at some point. It gave some advice that really stuck with me, or maybe I heard it from you. I can't remember, but it was basically like about like just the importance of like managing your own emotions during the during the deal process, because like during a deal process, often going to be times when there's frustration, there's tension, there things can become hopefully not combative, but definitely like argumentative. And there's deal points that people don't see eye to eye on. And
Yep.
this particular and I've been in deals like that for sure. And there's again, it's not a judgment. It's just that is the reality when there's big stakes or any stakes even. And yeah, I think like the one quote that always stuck with me is like, you don't want to be that guy that the seller's like, I will sell my business to anyone but that guy. You know what I mean? And people do. They be that they could be a big jerk in a deal process. A lot sometimes there's a lot of egos there. And yeah, if you want to get a deal done, you might be pissed off, but like you can't just like let your ego rip it and let someone have it. Because yeah, they're not gonna want to sell your business. They're not gonna ever want to sell to someone that they don't feel like respects them, and nor should they.
Yeah, it's interesting that the real estate market transacts very differently. There's this reason for real estate agents to interact with each other versus the seller and the buyer. It's because a seller might not sell to a buyer if they don't like them. And so when everyone's like, no, they're trying to get backdoor on a deal. No, it's just that exact reason. I don't want that person to buy it. And in businesses, that's actually really, really important, especially in small businesses that reflect the founder's culture and energy. Well, let's talk about your first deal, because I think that's going to help set the stage for why you're acquisitive and kind of the things that you're able to do that many others aren't. So how'd you evolve that long-standing check-in friendship call into, okay, this is now going to be an opportunity?
Yeah, and it's interesting because our first two deals essentially happened almost simultaneously. They
No, Sam.
parallel, yeah. Yeah, so it was you can't write it. Yeah, so
Grace, give grace to your team.
yes, yes, and it was quite an interesting story. I'll start with the first deal of the two. Essentially, there was this division of a services division of a software company, and I have to be a little coy on some of the details, but I think we can cover a lot of this. So basically, the software company was acquired by private equity. The private equity firm, was like, well, I'm buying the software company, like 100-person software company or whatever. There's a services division of a few people doing written case studies, which was strategic to us because we specialize in video testimonials. What's derivative and adjacent to a video testimonial? It's a written case study. But there's a ton of like shared knowledge, or there's a ton of knowledge that to actually do anything right in creative services. So like it would have taken us, years to basically even just learn that process. So we're like, all right, like, can we acquire this capability and the revenue that comes with it, and not have to like pay that massive learning curve?
Yeah.
So basically, like I had to build a really good relationship with the leader of that business unit. So this was actually a really unique situation where there was no like founder per se that I
Great.
was buying. I was buying this business unit that came with, a leader of it. And he reached out to me. He's like, hey, this private equity company's swooping in. Things look really uncertain. I don't know. I don't think they really want the services. They're here for the SaaS revenue. Maybe we can kind of, figure something out. And yeah, fortunately I had chatted with him before and had a good relationship. And so basically I ended up having to negotiate with the private equity company to do this like carve out asset sale from the PE buyer. And it was the deal like died multiple times. And basically I gave them a pitch and like, yeah, sorry, we brought this to our investment committee, and they threw up all over it. And I was like, yeah, sorry, like I get it, like whatever. And then I eventually came back to them, just like I think I just made the deal better, and somehow we got the deal done. It was like a very like threading the needle thing, like buying it from a private equity company. Very weird situation. You don't usually buy a smallish agency as a business unit from a private equity company who just acquired it from a software company. But I guess the main point of that story is like, don't be afraid to get non-traditional. If you believe in yourself and you keep pushing, like, weird things like that can work out.
Yeah, carve outs happen quite a lot. Whenever you hear about businesses that are full service that have kind of diversified their books, well, buyers may not want some of those or don't want some of the services. And so most of the time they die on the vine. So this is why building these relationships, being curious and being acquisitive, even if you don't know, like you didn't have massive M&A experience, you weren't super systematic in this, is opportunistic. But the fact that you have your feelers out, the fact that you're paying attention, these things can come to you. That's a wonderful, it's a spoiled first deal, Sam, as an acquisition, because you have the pedigree experience that private equities transaction brings into it. So they're pressure testing you in some capacity, but they really don't care because they want it to go away. So you have like so much benefit, Sam. How did you sell it to your team?
Yeah, it's a great question. And I think it was a really easy sell, selling to the team, selling to the broader leadership team, because it had been something like getting into that adjacency of written case studies had been something on our roadmap for quite a while. So like that is, I think, worth noting. It's like, you know, it was aligned with our strategic plan that
Good.
everyone was already on board with. So it was very like sometimes, it's easy to be acquisition happy and he'd be like, oh, maybe I should buy this. And the team's like, well, like, does this fit our strategy? And sure, strategies
Yeah.
can change, but like in this case, it was such a clear strategic fit. I mean, the team, rallied around it and they're like all over it. And then literally like with at the same, time period, a couple weeks after we started talking to this company, we, had another company, that was at the time, like our biggest probably direct competitor, reach out and yeah, we started working on those deals in parallel. And we closed them both around the same time, which actually worked really well, in the sense that like we one company had a much larger book of business and the other company had, the right leader that was like coming to stay and is still running that division. And, so I think we kind of like, that was kind of our strategy. Yeah,
You put the puzzle pieces together.
exactly. Yeah.
Yeah. How'd you feel after that? A little tired, limitless? Which
Yeah, I
direction?
mean, I've been chasing that dopamine hit ever since spring of 2024, Peter. I just try to get back there. No, it was a blast. Yeah,
Yeah.
it was super fun yeah. I mean, I also have to give so much credit to my leadership team because I basically was like, all right, they helped me get my executive team helped me get the deal done, and then my leadership team and my exec team like integrated everything. Um, After that, like I didn't do basically anything in the integration process because credit to my team, that's their they are just so good there on the ops side and they just
Yeah.
ran with it.
What assumptions did this change about, because these types of deals don't, in many people's opinion, don't come around that often, although they once in a life transactions come around like every week when you're active. But is there any assumptions that you had that turned into false beliefs that these transactions helped push you towards?
I think one assumption, and when you close two deals in a matter of months, is this is easy. I'll just keep doing more of this. And I think pretty quickly I was disabused of that notion. Mostly, I think just more from like a deal flow and like funnel math perspective. I went 2 for 2, and then I was like, okay, like I'll just find a couple more like next week. But yeah,
This
I
is
think
this is this is how it's supposed to be.
yeah, exactly. So
Yeah.
like my expectations were probably wildly high, and obviously in reality you have to, as I've learned, like you have to talk to a lot of people to find those good fit deals on both sides, right? It
Yeah.
doesn't always happen that quickly that you can actually consummate a deal.
In the M&A process, did you were you satisfied with the functional experts you collaborated with to like craft an LOI, negotiate on your behalf? How much heavy lifting did you do versus leaning on others?
Yeah, I mean, we keep it as simple as possible, but no simpler in general. Both of the deals were, I would say like they were appropriate from a risk and sizing perspective that like if the deal like blew up, thanks to the deal structure and the deal size, it's like we were going to be fine, right? So I think there's different levels of risk that you need to address and different experts you need depending on that. For these deals, as I know you advise, it's like you start off buying something ideally like that's, in that like 25-30% of your size revenue wise. So like you can kind of easily absorb it. And that's, basically what we did, maybe like 20-25%. Um, and yeah, so I think now I think it's gotten even better nowadays with AI, just the help that like I can triage deals and just do a deal analysis so much faster, you
Yeah.
know, using GPT or Claude, feeding P&Ls into it, get a quick summary of like, okay, what are the biggest like things to flag here? And then do my own due diligence after that. But yeah, I mean, I'm having AI now, and I guess we had it in early 2024, but I wasn't using it as much back then. But yeah, it's made it even more helpful.
Yeah, for sure. You had described that both these deals were a little hairy. They had to get worked on a bit. And there's different things in different ways that the team needed to be mindful about. How did you prepare them for the work post close you were asking them to take on?
Yeah, I think I'm not sure if I did prepare them much. I think to their credit, I think everyone was just really excited. I guess if I prepared them at all, I prepared them by like showing the strategic fit and like the benefit that these deals would bring, such that, everyone was super, especially super happy to just, dig in and get stuck in and go to work. And yeah, I think that's really important is like, that as founders, like we always have more context and like, our broader team may or may not have as much context or never has as much context. So yeah, just making sure everyone understands like why we're doing this. And, yeah, I think everyone was, and a great deal makes it easier. But these deals were things that like the businesses were, rough diamonds in some respects. They needed some polishing up. And we knew that and we were okay with it. There were areas that we wanted to improve and change over time, but the strategic fit was just so obvious from, video testimonials to written case studies. And, it was just like, peanut butter and jelly. And everyone was just like, yeah, let's just figure this out.
Let's unpack the team's enthusiasm for a moment. One of the things that's really useful as a leader is learning and development programs, training, education for your team. And the line is, if I spend all this money training my team and they leave, and the flip side of that is if you don't spend all that money training them and they stay, and is a way to fast track their learning and development. So it's a great thing to be a part of a growing company, doing really cool things like growing through acquisitions and getting the opportunity to be responsible for something that's so significant. Touch on that discussion and your intentions for your team.
Yeah, yeah. I think it's such a good quote. It's like, well, what if they leave? Well, what if they stay and you don't train them, right? Yeah, don't invest in them. Yeah, I think for us, there's also a, I think incentives and like comp plans are important as well. Like, it's on like my executive team, especially, it's like, if they're incentivized on, on some, percentage of top line revenue or a percentage of profit, like whatever it may be, these are opportunities for them to really, quickly increase their comp that like a good month of sales is may not be able to quickly affect as much. Right. So I'm a big fan of education and training people. I'm also a fan of making sure that you align incentives on their comp, or at least don't make it deleterious to their comp. Which I mean, sometimes founders don't realize that they can do. They accidentally put people in positions where it's like, yeah, I'll do this, but now like you're taking me away from like the main way that I make my variable bonus by doing this. So I'm like,
Yeah.
even the best person is never going to be as excited. I think it's like it's Charlie Munger quote, like, show me the incentive and I'll show you the outcome. You don't necessarily want people who are like purely driven by incentives, but I think it's very important to uh, respect incentives and respect people's time and energy and make sure that you align and support them in ways that they can hit those incentive targets.
Yeah, let's make it real. These are people who already have operational day-to-day commitments. They might feel that they have limited bandwidth. And Sam, the founder, shows up and does 2 acquisitions within less than 60 days from each other. And the responsibilities you're asking them to take from this may not be present in their position descriptions today. And your team was on board with doing that. Anything to say on top of that?
I think it's just overall culture and people and
Well, describe
yeah,
that. I mean, culture
yeah,
and people, yeah, of course it is, Sam. But your culture and people have a certain standard. It sounds like
yeah.
they're matching. So what? Give it some tapestry.
Yeah, I think, well, one of our core values is probably like one of our biggest core values is always be learning and growing. Like we vet people. We like curious people. We like people who are learning personally and professionally. Like every time we interview someone to join our team, we always ask like, what's something you learned recently, personally, and what's something that you learned recently, like professionally. And we're just looking for there's no right or wrong answers, but we're trying to avoid thin answers. We're trying to get people who just love to learn, love to grow, love, are curious. And yeah, as you said before, it's like what better way to supercharge your learning by, integrating new companies.
Yeah. And seeing under the hood of a competitor.
Super fascinating. Super
Yeah.
fascinating. Yeah.
What did you learn when you started unpacking your competitor that you didn't know about their business? Because
Hmm.
I want to give this some context. So many agencies, especially ones like us who started our journey as accidental entrepreneurs, so we look at the agency landscape and we kind of go, is that how it's done? Are they good role models for us? Because we're experimenting over here. And so you look at your largest competitor and go, okay, do they know something we don't? And then when you get an M&A discussion, you get to see under the hood of this company you may have thought had their act together. What did you learn?
Yeah. And I think in this situation, for context, they were our largest competitor, but they were roughly 25% of our size. So like it wasn't like it wasn't like they were like parity on a revenue footprint. But I think one thing that I learned is like it. So let me roll back for a second. So a lot of our work is projects or packages. We do a lot of big projects that have a reoccurring nature, but it's not necessarily like a monthly recurring retainer business. Neither were these acquisitions, neither are a lot of, companies and creative B2B services. I think the biggest thing that I learned, or just like a reminder, is that like um, a lot of times people think their accounting is correct, and it's wildly incorrect. I've been in that exact same position. And sorry, I guess it's not that it's incorrect. It's that cash basis doesn't accurately reflect. It's correct on a cash basis, but for a business that's doing projects, cash basis isn't going to actually reflect the nature of the business. It's just reflecting when you get paid, and if you get a prepayment for 100K in January for work that you're going to do in March, April, and May, the revenue and expenses are not lining up at all. So you really can't get a accurate picture of the business performance and business health without accrual accounting. And thankfully, like we had just learned that lesson a couple of years prior, or maybe even a year prior to this acquisitions. Something that we, had to learn the hard way as well. But yeah, I've never seen a company actually in project-based creative services like do accrual accounting properly.
Yeah.
And honestly, I wouldn't necessarily expect them to in a lot of ways, because as I've been, especially around like $1 million in revenue, but it's just so crucial that I can't overstate the importance of, as soon as you're past $1 million in revenue and you're doing project-based creative work, it's like there's no way to get an accurate view of your business if you're not on
Yeah. And not even on project, even on reoccurring,
even.
it's understanding how you're booking the business, and understanding how you're fulfilling on it. And to your point, if you're trying to structure a deal and you buy a business and say, okay, you're going to keep all that money you put in your pocket already, but you have capacity already committed, it's really hard to map those two businesses. And the fact that you had that experience when interacting with the market is very helpful. Was there any friction or negotiation in regards to how you are approaching the deals that you learned from? Because you know my two favorite deal structures, right, Sam?
No, remind me.
Oh, my two favorite deal structures:
Yeah.
100% cash on close when I'm selling a business, and 100% seller finance when I'm buying.
Yes, right. Yes, exactly. So in terms of negotiating, so with the private equity company, we basically gave them like 100% cash on close, and so to get the deal done with a reasonable like valuation that we could stomach. So it's like 100% cash on close of a discounted valuation. There's no like structured earnout at all.
Good.
It's like, all right, here's like because that was the problem we first tried to do. My favorite deal structure of seller financing, and the thing is like they didn't like need the money even when we did the cash on close, but they definitely didn't need the headaches of like staying in touch and like me like giving them revenue reports on like what we were going to pay them that month. They just wanted something clean and unstructured. And so that, they totally rejected my first offer and were basically like, yeah, no, we're going to keep it. And that's when I basically went back to them with like realizing kind of what they wanted, which was like, it was
They
probably
wanted the
like,
problem. They wanted it to go away.
exactly. They wanted no
Yeah.
headaches. They weren't necessarily trying to maximize valuation, but they wanted clean, no headaches, cash on the barrel. And I just, did my team and I did a bunch of projections and try to figure out like, okay, did some sensitivity analysis, and we're like, all right, what can we, good, better, best, like what can we like, or a scenario analysis, like what can we afford to pay, and so we just that's how we got that deal done. The other one,
Well, let's before you jump to that, because this is an important distinction. The job of a buyer is to give the seller what they want in a way that you can quantify a multiple of return. In this instance, they, as the seller, didn't tell you what they wanted. They just rejected your offer. It would have been so much easier if they said, clearly, Sam, we just want you to take this off our plate and give us a number you can stomach. And it would have been easier, but that's not how the game typically gets played. And so your reading of the tea leaves of their rejection of your offer just shows you and your leadership team so much credit. It's most just move on and they miss the fact that that's what the selling party really wants.
yeah, thank you. And I think the other sort of nuance was that like there were like other political dynamics at play there. So like the the way that we sort of misread it initially was because like our champion, one of the operating partners, like couldn't really like he was willing to do the deal at whatever, but the deal we gave him made him, in hindsight, made him look pretty bad presenting that deal to his investment committee. You're like,
Yeah.
what the heck? Like, this is stupid. Like, why would you? Like, there's no risk to them. Like, so like, basically, his like willingness to get the deal done, in hindsight, like made me come in with such a beneficial offer to me, but it wasn't good for him. And then once I realized that like he, had to like, he couldn't do it. Like he had to save face with the investment committee and also just not do anything that was like too ridiculous. I was like, oh, okay, I see what we have to do here. Like we have to
Yeah.
like satisfy these multiple situations. Yeah.
Yeah. It's such a real world deal lesson. Goes back to how you found these deals. You're listening and you're paying attention, not just trying to like fit it in and move on when you hear no or get rejected. How did that play out for the second deal?
For the second deal, since we were, negotiating directly with the founding team, there was a lot more flexibility, and we could actually have a good
Deferred.
amount of structure. Yeah,
Yeah,
we could have
you could build in deferred consideration.
exactly. Yeah, so we could build a deferred consideration. So we had like an earnout or seller financing kind of component to that. Personally, like so we did it as like a percentage of revenue, over X percentage over X amount of years. I personally like to do it over as a percentage of revenue. I know some people do earnouts as a percentage of profit. I think it's great if you can do it as a percentage of profit, but I think a lot of times you probably know more about this. You definitely know more about this than me, but like I think it's just like easier, cleaner, like percentage of revenue. No one's arguing over that. Where it's like profit. It's like, well, did you like if I'm running the company now, I can manipulate the profit. And I just wanted something that was fair, black and white. We can all agree on it. And I'm sure I could have put more controls in place and be like, I'm not going to, do X, Y, Z to manipulate profit, but I just wanted percent of revenue over X years. There were some other like kind of components where like there's this level percentage of revenue for active clients, and had to be a definition of what an active client is. If there's a sales pipeline, people that are like almost closed, there's a couple different buckets. There's like these are like pipeline clients. They get a lower percentage of revenue if they close within like X amount of time. So I think a lot of the like, and then there was like the consideration at close, but I think a lot of the kind of negotiation, as it were, was figuring out basically, okay, how do we fit all these different client, book in the greater book of business into what bucket, and like what are the definitions of that? Because understandably so, they're like, well, we think we did so much work for this person to be, they're about to sign, like, and I'm like, well, like, okay, but like we can't like have that go on forever. It's like if they sign within X days, I will, you put your money where your mouth is, and that we can reward you for that type of stuff. So yeah, I think that was a lot for our structure. And again, I'm not saying this is the best way to do it. It's just how we did it. But yeah, that was a lot of the kind of back and forth. I think getting those definitions and percentage amounts correct, and time lengths as well for the different situations.
Yeah, you're spending quality time examining the customers, the clients, and figuring out retention opportunities and the future revenue. You pay present value for future expectations. How much time were you investing into the deal?
So I think, I mean, I probably was working on it, at least an hour a day from, mid February to mid March. So it was like pretty, yeah, it was like a pretty yeah, so it was like maybe 30, 45 days. I'm trying to recall it. I definitely really heated up in mid-February, and then I think we got it done like late March. Now, between talking to my executive team, talking to the sellers, I mean, I would say probably at least like talking to lawyers occasionally, talking to, whatever. I mean, 1 to 3 hours a day for that period probably. It's definitely my main priority, occupying my mind share. Yeah.
100%. Compared to the organic activities that could get your mind share, was the M&A activities worth it?
100%. And I think I also was fortunate enough to not really, even then I had a VP of sales and marketing, still do, and he's really responsible for that. So like I could have spent all day on it if I wanted to. So it wasn't like I was dropping the ball on other, which I think is important to know. Like I think it's like the more you can replace yourself, the more time you can spend and not worry, because it wasn't like organic was necessarily decreasing in that time either.
Yeah.
Thanks to my executive team and broader leadership team.
Well, give us a sense of the relative scale. So, like, how many people was the leadership team when you did your first acquisition?
So let's see, I'd say leadership team is probably about 8, executive team 3, and basically like myself and the executive team, my now president Kevin and my VP of revenue Dustin, like and historically have always been kind of like the deal team to like get things to sign LOI or sign asset purchase agreement, and then that's usually when we bring in the broader leadership team. With some exceptions, I think it's just like I don't want to necessarily distract the broader leadership team too much if the deal's not going to close, because obviously, yeah, a lot of deals, like I was lucky and closed my first 2 deals, but like after that, like had a lot of deals that like just ended up falling apart, because that's how it goes, right? It's very hard to actually, what I've learned is like it's surprisingly hard to actually get a deal done, mostly because it's a lot of things you have to agree on, and sellers really have to be motivated. And sometimes they kind of they're like, oh well, this is interesting, but actually like I'm just gonna wait. And it's like, oh, that's your prerogative. Um, but yeah, I mean, it's like you need a really motivate. I know you have some stories here, but it's like, yeah, motivated sellers make a huge difference to actually getting the deal done. And not all sellers are fully motivated. And
Yep.
that's not a judgment. We all are curious when someone says, oh, like, we're all curious to find out how much our business might be worth, right? So like, I'm not judging that, but I think it's like when you have a motivated seller, that's when you really get deals done.
Yeah, and there's a difference between a motivated seller and a distressed business. And sometimes people think they're the same. They're not. It's the founder having a reason why they want to sell the business, and that doesn't always directly map to the performance of that business. Did doing
Right.
these deals increase your ambition for the business?
Yes, for sure. I think what we're trying to figure out now is how can we structure things in a way that is motivating um, to a seller, um, in terms of even when their business is going great, right? And they aren't on a timeline to sell yet. That's probably something that we're still trying to figure out. Other than being part of a great team and a great vision and letting them focus on their zone of genius, taking away like all these other areas of their job that they don't get energy from, like which we can do. I think that's kind of the next one of the next steps for us is like improving our value proposition as an acquirer and kind of figuring out what that truly is. And yeah, like we have a lot of excitement around that, and probably I think we're close to cracking through on that.
Yeah, we won't mention the current deal because Sam, you do have opportunities and discussions that you keep in the hopper and you're working on actively. So, what kind of acquisition excites you, given where the industry's going with AI and the marketplace and the people you service?
Yeah, it's 100%. So for us, I think our strategy is one where we are building. We want to be in our broader group of companies, like the creative partner for B2B marketing teams, specifically our ICP, which is typically B2B SaaS marketers, companies, mid market companies, 100 to 1,000 employees. So we've been fortunate enough to build a great business organically and with these acquisitions. And also, we incubated another brand in less than a year. It'll do about 1 million in revenue. So that's a whole nother discussion we could get into, like incubations. We tried to acquire a couple companies, it didn't work out, and we're like, all right, we'll do it ourselves. Yeah, but basically, like we would love to acquire more companies who sell to B2B marketers, B2B tech. So anything in content, design, video, of course, is a no-brainer. But even broader than, I think we're sort of becoming more agnostic about the medium and way more open to just anything that helps deliver value to our core ideal customer profile of B2B SaaS marketers.
If you were talking to a founder who's never bought a business before but is curious, what do you tell them?
Yeah, I would say, what would I tell a founder who's never bought a business before but is curious? Think, um, it's I would probably tell them that buying revenue is cool, but buying capabilities is better. That's probably what I tell them. It's cool to buy revenue, and by buying revenue, I mean like buying another company who does exactly what you do, like a one to one, apples to apples, business of yours. Like that is actually a great way to grow your revenue. I think that it's if you can grow your revenue and grow like your capabilities, that to me is like even more exciting because there's other ways to, you can also grow your revenue by just spending more on marketing ideally, right? And it doesn't always work like that, but there's other ways to grow your revenue, but it's very hard in my experience to quickly move into a new capability in a matter of weeks or months. That can take years to do. And even though we've done it in incubations, I don't necessarily think it's always that easy. And just being able to, yeah, just move quickly into a new capability and cross sell it to your existing customers can really create a lot of value.
And when it works and you did the deal that brought in capability that is effectively being cross sold to your current clients, man, does it feel good.
100%. And in a lot of ways, I think that's a big part of our value prop to sellers is that, they might have, 50 B2B tech companies they work with, and that's their whole client base. I mean, we have almost 500 B2B tech marketing clients that we work with. So like, if they want to grow, have a maybe a smaller piece of a much bigger pie, like we can help them, just pour rocket fuel with that cross sell through the trusted relationships that we have. So I think, yeah, also removing a ton of operational issues and just, helping them do what they love to do and not have to worry about what they don't like to do. Uh, but yeah, for sure, that cross sell is a big part of that our strategy. Personally, I've also seen people build agency holdcos with no cross sell. So I think there's so many ways to win.
Yeah.
For us, we love the cross sell though.
In closing, if we fast forward a few years, what do you hope you have built by then? Not just financially, but like in terms of freedom, opportunity for your team, structure, optionality. What's important to you?
Yeah, that's a great question. I'm really happy with my level of freedom personally. I've worked really hard to get to that. And so I would say like I'm kind of already there on the freedom front. I'm pretty non-operational. Like I have a president in place who's incredible, revenue team, all these things. So like I would have said freedom if I hadn't been there yet. But since I'm kind of there, I'll say think I just love you know, kind of growing and expanding our vision for the category that we're looking at, and then hopefully kind of just dominating that category. So I think we're moving from just B2B. First we were just video testimonials, then now we're more B2B video, and now we're slowly but surely planning to move into more like B2B content and just be the ultimate B2B content partner for mid-market tech companies. So I mean, success would look like achieving that vision. And everything that comes with it, including the rewards from company growth, but also growth opportunities for people within our team, giving them more paths to hop over to new companies we acquire, which are new brands we incubate if we have to incubate again. It's sometimes really hard to give awesome people a growth path, but it becomes a lot easier once you have multiple things and they can kind of pick their flavor. And if they want to work on the super creative part of the business, they can work there. If they want to work on the more productized part of the business, they can work there. So I think that to me is very exciting.
And you're playing the game the way you want to.
100%. Yep. And I think also that I also think it's important to me to be independent and kind of work at our own pace. That's super important to us. I'm open to anything, but I think for us, the fact that we are an independent company, we don't have any outside investors, allows us to take a really long view of
Thoughtful
things. Yeah,
and
thoughtful
thoughtful.
view of things. Definitely not, not opposed to the right outside investors, but I think it's whenever kind of like whether it's like private equity or venture capital or any sort of capital, it's like I think you have to ask like what sort of timelines and strings does this money come with, and like are you aligned with that personally, and like
Yeah.
you might be there. Like if you take private equity, you got to sell in like 5 years,
Yeah.
but I think for us like we've flourished by being independent and being taking a long view and kind of moving at our own pace.
Wonderful. Sam, if someone's listening to this and they heard themselves in your buy box, or just like many of the other opportunities that have come your way, they just want to start a discussion with you, what's the best way to do it?
Yes, absolutely. Best, a couple different ways. They could send me a message, sam@storysnap.com. Hit me up on LinkedIn, Sam Shepler. Send us a message at sam@storysnap or on a storysnap.com form submission. I give 3 because, you never know if you're going to end up on spam on email or LinkedIn. So it's like, if all else fails, like one of those will get to me.
Sam, thank you so much for being a resource. And I will definitely be having you back because you're not done doing deals. Thank you, my friend.
Thank you, Peter. This has been awesome.
If you like this episode, probably like one of our other episodes. Click here.